Good morning, everyone. Good morning, everyone. Thank you. I already met Chijioke a bit earlier, and we agreed that this session is going to be interactive. I'm going to start with a question, but that will be for you, not for him. When you hear credit, when you hear debt, what comes to mind? I'm going to pick the loudest word I hear. What comes to mind? God forbid. And contrary to that, when credit is used right, it could open doors to numerous opportunities for everyone. And that is what we're going to be having a conversation around. And please listen attentively and take notes of questions because we're going to have answering them at the end. So thank you so much, Chijioke, for joining me.
Thank you.
So I'm going to start with a very, very obvious question, right? You work at Carbon, and Carbon has been known for credit. So over the years, you guys have evolved from being a payment platform to retail lending to an MFB. How did that journey come about?
Okay, thank you. So, hope you can all hear me. So we started off as a lender because, Nigeria, when we started in 2012, and the same conditions that were in 2012 are still here today. People don't have access to credit. And when I say that, let me tell you what I mean by that. So I was very fortunate. At 18 years old, I got a credit card from my bank. They just sent me a credit card. I didn't even apply. And I just signed on a dotted line and I got credit. And then when I was working and I moved to South Africa as a Nigerian working. And my bank, and I think I was 24 at the time, they gave me a fuel card. It was like credit. I could basically drive my car and put fuel, and then every month I'd pay back. And then at 26 years old, I got a mortgage. Again, I'm a foreigner. I have a Nigerian passport in South Africa, and the bank gave me a 30-year mortgage. So coming back to Nigeria, I was late 20s, I couldn't get credit. So I'm thinking, I'm a Nigerian, I'm working in Nigeria, I earn in Nigeria, and I couldn't get credit. So that was a challenge that we still see it today, where people, by and large, don't have the right credit for them. So that's why we started, and that's why we're still here today.
Well, thank you so much. And that's really profound. So when you came in and you saw that there wasn't credit, what helped you to know that, okay, this is the product or this is the problem I'm going to solve for Nigerians via your company?
So, funny story, at the time, I was running my brother, Mr. Biggs. We had like 20 Mr. Biggs. And the bank that we banked with, we called them up and said, can I get a loan? And we were putting in roughly, I would say back then, 20, 30 million naira a day cash. And I was asking for like 1 million naira. And the bank took 2 weeks to get back to me. And then they laughed and said, okay, look, we'll give it to you, but you have to sign a personal guarantee. And when we realized that we had 20 bank accounts with this bank, we're putting in all this cash every day, and they couldn't give me a loan. Or they were reluctant to give me a loan. We just felt this was the right time to.
Thank you so much. But then again, I'm going to ask another question in this light. So I asked the first question, when people hear credit, what do they think? I heard God forbid. People think debt trap. People think stress. People think an unending cycle. How exactly can we shape this bad reputation? Because where you're coming from, you got a credit card, you got a mortgage, you were building, and you were doing that on credit. How exactly can we shape the narrative in Nigeria?
So I think in the usage of, when I was using credit, I could afford credit. So, for instance, the bank wouldn't give me a mortgage if they didn't think I could afford it, and if they didn't think the collateral that I was using was worth it, right, which was the house. I think in Nigeria, the challenge we face, we're seeing that increasingly. We went through a cycle where there was no credit, and then companies like Carbon started and then credit was available, then there was this proliferation of everyone, like good and bad borrowers. And what you're seeing now is you're seeing predatory lending, you're seeing sort of false advertising or deceptive marketing. And then unfortunately, you're seeing really, really aggressive collection and unethical collection tactics where people are being hounded on WhatsApp, on the phone to pay back. And I think that's what scares people in engaging with credit, is that they don't want to fall into that bucket.
Thank you. You mentioned something I'm going to speak on because I have an experience about how I was managing a corporate account and money got debited because someone had used the account as collateral and they took the money. And it was on me because I was the manager of the account. So I quite understand when people see credit as bad. But on the flip side, I'm a financial educator. I know what it takes or what you can enjoy when you have good credit, when you're able to get good credit. So I don't know if you want to share more light on that how can people maximize credit for good as a tool rather than...
So I think the first thing is you need to know the all-in costs of credit when you're borrowing. So when you look at marketing, people talk about things like APR, and it's all very confusing. So, for instance, APR is the annual percentage rate of your loan. But another way of looking at it is it's the all-in price of borrowing. That's how I would look at it. And if you think about, let's say, a pizza, right? You're ordering a pizza and the pizza is 15,000 naira. So, but then if you don't factor in the delivery costs, etc., and let's say that the delivery cost is 6,000 naira. So your pizza is really 21,000. And a lot of the times with loans, people look at one price and they don't factor in the total cost of the loan, and that's where people get into trouble. So it's know the total cost, know when you have to repay, and more importantly, at Carbon we have this rule where we won't lend money to anyone if we believe that the servicing the loan will take more than 30% of their income. So that's also a big issue for us. We need to make sure that the customer can afford to pay us back. Even if they have other loans, we look at their total debt, and if it's more than 30% in total, including Carbon's obligation, we won't give a loan. So I think that's also something to think about. And also, I think people have to also bear some responsibility. There are regulated lenders in Nigeria, and I think you need to be more. We have to look for proper lenders that if you report them to central bank, something will happen. Not lenders that you don't know where their office is. They can disappear instantly because then they'll just hound you.
So thank you. You pretty much already set the tone for my next question I was going to ask. Because I was going to ask, how can we know that this is a realistic time to start borrowing? How am I sure that I'm not going to end up in a debt trap that I'm not going to come out of which you mentioned you shouldn't be doing anything more than 30% of your income? But now that you've answered that, I think I'm going to go to the next question that says, how exactly do I know that this particular company I'm going to meet is good for me in terms of me borrowing? How am I able to vet offers that are good? Remember you said that people do not look at the total package. Using the pizza example, you think, it's just 15K. Meanwhile, you actually need 21,000. So how exactly do I vet offers and ensure I'm making the right decision for myself in terms of borrowing?
So before I answer that question, I just want to address, I'm not advocating you should just borrow because it's a good thing to have. Leverage friends and family if you can first. But there comes a time where even friends and family can't give you what you potentially need. So it's not. I'm not saying borrow because I'm it's good for me. And it might not be good for me because we reject a lot of people. So I think you have to look at the reputation of the lender. And there's so many sources on social media. Like there's, is this lender going to hound me? Will they, do they have a reputation of aggressive collection tactics? I think also very importantly, does this lender report my good behavior to the credit bureaus as well? Because so many people borrow money and they don't think about the positive or negative implications of repayment. So a Carbon, we do a couple of things. You download the Carbon app today. Even if you're not a customer, you can see your credit report. We do that for everyone. And the reason why we do that is we believe that it's actually your data, right? So if people borrow from Carbon and they perform well, they have a good score or good reputation, and they can use that score and go to a competitor. They can go to like a GT Bank, a Zenith, and say, look, I want a bigger loan. Carbon can't give it to me, but I have this good reputation. Conversely, we also report bad performance as well, which I think we all have to do. There are some lenders that don't do that. They don't report good data at all. They don't report anything about you except when you mess up. That's when they report bad data. So I think you have to think about, is this lender also looking after my own interest by reporting good data? Are they very aggressive and when I say aggressive, I mean like rude, like telling people Chijioke is dead, we're looking for him, etc. So I mean, so that's what you don't want.
Okay, thank you so much. So we've heard that you want to be sure that you're going to meet a company that will not tell all your WhatsApp contacts that avoid this person. They ran away with our money. I know that a lot of them do that. But I think from your responses, I want to ask another question. The reason is because I was having a conversation earlier today, and I was talking to this person, and he said, oh, we have a credit bureau in Nigeria. And that is something that happens every time I'm trying to educate people about credit, that there's nothing wrong with borrowing as long as you have a reason to, right? So could you please educate us on the credit bureau system? How can we ensure that we are in good standing? For context, if you follow the American standard, if you look around in Europe, they always talk about credit score. But in Nigeria, we don't do that as much. However, it exists. But before I start answering, let me give the mic back to him. So he's going to tell us a bit more about credit scores and how to ensure that we have good credit scores.
So we have 3 credit bureaus in Nigeria. And although some of them have scores, it's not really widely used. So they have at least a credit report that would showcase all your credit history. And I think, in Nigeria, because certain peculiarities, so for most people, they pay rent up front, of a year up front. We buy everything, up front. So whereas in other countries that have more installment payments, they require the credit score. I think for a lot of people, a lot of young borrowers, they don't realize the implications until it's too late. So I'll give you a couple of incidents. So we've had, sad stories where I had one customer who had borrowed something like 7,000 Naira, didn't pay back, got a scholarship in the US. He needed a clean credit score. He didn't, he hadn't paid. And he lost his scholarship. If you're applying for a visa out of Nigeria to any country, they're all going to do a credit check. And if you have a written off loan that hasn't been paid back, your visa is going to get denied. So that's also and it's as little as 2,000 Naira will deny you a visa. And for those who actually leave, they japa, they go to other countries, there's a company called Nova Credit that actually has relationships with Nigerian credit bureaus. So you're abroad, you're in the UK, you're trying to get a rent a house and they're asking for a credit score, and you're like, well, I'm Nigerian, I just moved here, so I have nothing. They will actually go back and look at your score through this partnership with Nova Credit. So there are a lot of implications of of misuse of your credit history, but there's also good benefits as well. I think, look, if people see that you are borrowing from institutions and you're paying back, they're more likely to extend more credit to you when you need it. So I think it's not all stick. There's also benefits for good behavior.
Thank you so much for that. So, like I mentioned earlier, you could lose some opportunities because of having bad credit score. So you want to be sure to check. Even if you've not borrowed before, you want to be sure to check. So I'm going to ask, like, how does Carbon help? How is there any tool, product that Carbon has that helps people to stay in check? So just in case you're not borrowing yet and you want to get more informed, I'm sure they have something.
Yeah, so like I said, on the Carbon app, you can actually look at two reports from two credit bureaus. And, even personally, like a few weeks ago, I looked at my credit report and bank said I had a credit card, which I don't. And, I missed a payment. So I had to actually write to them and clean that up. So you can do that in Carbon. You can also write to the credit bureaus directly or send them an email and get your credit report as well.
Thank you. Another question would be, what are those reasons, or what are the most common reasons why people get rejected when they try to get loans?
So there's a couple of reasons. One, affordability. From all the information we see from you, for instance, we'd ask for your bank statement. If we don't believe that you have enough income for the loan that you're trying to pay, we will reject you. Other things could be your data, like your identification, your BVN or NIN. It's not completely accurate. And then, some other lenders. The other things as well. There are other interesting things where if you've applied several times, too many times, well, why is this person applying too many times? Exactly, if they're desperate. Those are. But it's affordability, and because we don't want to get into a situation where we have given you too much debt. So we don't do it in Nigeria, but in the UK, companies actually get penalized for giving borrowers too much money that they can't handle. In fact, one of the companies, Wonga, they went out of business because they got fined by the regulator because they were actually extending too much credit.
Okay, thank you so much. We have something around money shame. I've had to work with a number of people, and they're really sad that they're in debt and they don't know what to do, how to get out. So for people who are currently in debt, how would you advise them to? Would it be to refinance? Would it be to restructure? Would it be to? How can they come out of bad debt?
So I think the first thing is stop borrowing, right? I think we said this earlier, like literally just stop borrowing. Reach out to the company that you owe and work out a plan. I think for lenders, it's about credibility and trust. If you tell somebody, let's say you owe somebody 100,000 naira and you owe it today, and it's overdue by 6 months. If you say, I'm going to pay you 5,000 naira every month for the next, 15 months, that's better for the institution than hoping and praying that you'll pay them and they keep on calling you. If you actually say, I'm going to pay you 5,000, and if you're seen to be doing that, then institutions will be like, okay, this person's we're going to leave her until she pays back. We'll only call her if she misses a payment. So I think it's not all doom and gloom. I think if you're upfront, you can work it out. But then that's only if the institution you're borrowing from is credible and has your interests at heart. You see, So one of the things that's peculiar to our business is people download the app, they want a loan. We don't think they can handle it. They get rejected, and then they're upset. Your loan is crap, fraudster. And then they go to another borrower who will literally give them any money at any interest rate, because they know that how they're going to get their money back is they're going to download all your WhatsApp contacts. They're going to call everyone and say, I want my money back. So we can't do that, and we don't want to do that. So that's why we have to say no. I mean, like, good institutions, we're a business where you can't say yes to everyone. In fact, if you say yes to everyone, you probably go out of business.
For that, I was going to follow up with that, because now you've told us that we should take note of business that have our interests at heart. Are there a few things you would want us to take note of? What should we check? How do we do our due diligence that, okay, if I'm going to this company, I'm going to be getting the best service or probably the best rates that suits my need at that particular point in time?
So I think how a company markets also tells you a lot about them, right? So there's a lot of, borrow 100,000, pay 101,000 Naira back in 90 days. You see them on TikTok, you see them on Instagram. I don't have to name names. I'm sure you can even look at right now and you'll see them. I think that's wrong, because you're not going to pay 1,000 Naira interest in 90 days. No one can do that, really. Unless you have a long-standing relationship with them and, they've made money off you, so then they can give you a really, really low interest rate. So I think how they market is a sign. You go to their website. Are they regulated by the Central Bank of Nigeria? Are they FCC PCA approved? Do they do credit bureau checks? So that, I think those are the, and then of course, talking to people that have used them and looking at reviews.
Thank you so much. Okay, so I'm very sure that there's somebody in here that will be wondering, with all these things you said, should I still go ahead and get credit? Or I'm not sure this is for me. How am I sure that I really do need this credit at this point in time? So how can you pretty much encourage someone who thinks they need credit, but they're still unsure whether or not to go into it?
I mean, you can't really encourage someone to take credit. It's like, look, it's very personal. Credit is very personal, and it's really about your means, and not everyone's means. So some people say, I only take credit if it's for productive use, right? And that's fine. So education, working capital, asset financing, and they frown on consumption. They frown on getting credit for a phone. And some people are like happy to say, I'm going to buy a TV using credit, because they can actually afford it. They can actually afford to buy that TV, but they rather spend their money on doing something else and then spreading the cost of that TV. So it's not like that they're reckless. So I think with credit, it's, if you need credit, you have to ask yourself, can you afford it? And credit is not equity. It's not, you actually need to know how to pay it back. If you don't know how you can actually pay back a loan over, let's say, a 6-month period, that means you have reliable income. Then you shouldn't be using credit. You should be borrowing from the bank of family and friends, or you do without, or find a way. But so I'm not here to encourage anyone to take credit. I want people to just make the right choices, and also make sure that when you do decide to take credit, you find the right partner, not necessarily Carbon, but find an institution that wants to see you perform well and also progress.
Thank you so much. I think my final question would be around the features that Carbon have that pretty much sets up the customers for success when they come to get credit from you.
Sure. So people can apply for a loan directly, but for those that actually don't, they get rejected. It's, again, as I said, it's because either the information we have on you, the statements we get from you indicate that we don't think that there's enough affordability. So we also have other products like Carbon Circles, which is like a digital Ajor where people can actually save. And so we find that a lot of people that we reject initially go through that, and they save for like 6 months, 12 months. And that also lets us know that, okay, this person's been saving consistently for 12 months. They've been saving 10,000 naira, 15,000 naira, 20,000 naira consistently for 12 months. Okay, that means they have some income that maybe they didn't show, or it was an account they didn't share to us. So when they apply for a loan, we can actually give it to them because we know that they've got some reliable, they have reliable income as well. We have other products like Carbon Zero, which is it's like an overdraft facility whereby it enables you to even create your own buy now, pay later transaction with any merchant or with anyone. So you can not only use it at a store, but you can use it, to transfer money to someone that you need. So it's like it's an overdraft facility. And of course, we have debit cards, we have saving products, we have free credit reports. Yeah.
Thank you so much. So I'm going to be handing over to the crowd now. Does anybody have any question for Chijioke? I have one. Yes, I can take one question. The lady in front.
Hey, hi, good afternoon.
Good afternoon.
My name is Olatokumbo, and my question for you is anybody ever too young to build credit? Like, is there a point in your life that you have to get to build your credit score or to start having credit? Thank you.
Angie, so I think that you have to be a legal adult to get credit. I think that's really important. But I think financial literacy, learning about money, should be done at a much younger age. But we can't give a 16-year-old credit because they also need to be mature enough to take that obligation on themselves. So I think, you have to be an adult. And then for me, an adult is about 18 years old.
So much. One more. Second lady.
Who are we speaking to? Here? Okay.
Hi, good afternoon. My name is Martha, and my question is actually based off on the feature you mentioned, Carbon Circle, right? And so I just want to ask, is there a point where Carbon is thinking, okay, collaborating with other financial platforms, say, for example, the likes of Piggyvest, where you can also look at other people's saving culture to say, okay, based off of this, we can look at an alternative credit solution or a credit system where we can look at how this person is doing with their savings, even how they are paying their rent consistently, things like that. Is there a time where you're thinking of anything like that?
Yeah, I mean, we're open to working with other financial institutions, and I think that's also what open banking is the promise is that we can see lots of other people's data. I mean, we get data from other financial institutions for the loan application, but even things like how much. When we first started, we'd even look at things like how much you topped up on MTN or Glo, etc., as a proxy for credit. So there are so many different ways we can actually get affordability based on your activity.
Thank you so much for your questions. We're right on time now, and I want to say a big thank you to Chijioke for sitting with me and having this conversation. Please do well to Okay. So if you have more questions, Chijioke will be around for a few minutes. You can walk up to him and ask, or send it across through. Okay, or send across the question through Halifax, and he will be very happy to answer. Thank you all so much for listening in.
Thank you.